For most Americans, geopolitics feels abstract. It lives in headlines in distant places, in stories that feel important but not personal. Wars, alliances, sanctions, and diplomatic tensions. These things sound like matters of state, not matters of everyday life. But in 2025, geopolitics stopped being abstract, and by the end of the year, many households were feeling that rewrite without realizing where it came from. In earlier decades, geopolitics shaped the world economy in bursts. A conflict would flare up, the stock market would react, prices would spike and then settle. The system was built to absorb shocks and then return to efficiency, but 2025 marked a shift away from that model. Instead of shocks, geopolitics became a constant input, persistent enough to change how businesses, governments, and investors behaved, and that persistence is what made the difference. Energy was the clearest example. Oil and gas weren't scarce in 2025, even though there was no global shortage. Sanctions were enforced unevenly. Supply routes were political. Production decisions were strategic. But the markets didn't price energy based on abundance. They priced it based on vulnerability, and vulnerability doesn't disappear just because demand softens. So, energy prices stopped acting like a relief valve for inflation, but instead, they hovered. And when energy hovers, costs don't come down easily. That fragility, however, filtered through the economy quietly. Shipping remained expensive, food prices stayed elevated, and travel costs fluctuated. None of it dramatic enough to dominate headlines, but all of it persistent enough to shape household budgets, and that's how geopolitics entered daily life. Sanctions also played a quiet role in this repricing. In 2025, sanctions were no longer exceptional tools. They were standard instruments of policy used selectively, adjusted strategically, and maintained indefinitely, and that changed how companies planned. Businesses didn't assume access anymore. They assumed constraint, and when constraint becomes the assumption, pricing reflects it. Another subtle shift was the politicization of capital. In 2025, investment decisions increasingly reflected geopolitical alignment. Where money flowed depended not just on returns, but on trust. That slowed investment, and slower investment limits supply, which supports higher prices, even without demand surges. For the United States, these changes had a particular effect. The US still remained central on the world stage. The dollar remained dominant, US markets remained deep and liquid, but centrality brought responsibility. The US absorbed risk. Capital flowed in during uncertainty, strengthening the dollar. That helped contain inflation, but it also pressured exporters and manufacturing. At the same time, geopolitical commitments require spending: defense, security guarantees, strategic investments. Those costs didn't disappear into abstraction, they filtered into borrowing, taxes, and fiscal trade offs. One of the most misunderstood aspects of geopolitics in 2025 was that it didn't feel dramatic. There was no single turning point. Instead, there was accumulation. Small frictions layered on top of each other until the system felt heavier. That's why many people struggled to explain why life felt more expensive. They were looking for one cause, but there wasn't one. There was a web. By late 2025, it became clear that geopolitics had changed the pricing logic of the world. Efficiency was no longer the primary goal. It was all about resilience, security, control. Those priorities cost more, and that cost didn't fall on governments alone. It moved through supply chains, financial systems, and consumer prices. Looking toward 2026, this matters deeply because geopolitical repricing isn't a phase, it's a framework. One that says the world isn't going back to frictionless trade, that energy won't return to being politically neutral, and that capital won't ignore alignment. That means cost, persistent cost. For households, the implication isn't fear, it's understanding that prices may not surge, but they may not soften, either that relief may come slowly and unevenly, because the forces shaping costs now sit outside traditional economic cycles. They sit in politics, strategy, and global power. 2025 wasn't the year geopolitics shocked the economy. It was the year geopolitics became the economy, and 2026 will be the year people fully adjust to that reality, whether they realize it or not.